Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, article came out. It actually came out a while ago, but everything in this is still pretty accurate. We're going to talk about this. These are the 7 key real estate trends for 2023 to 2025. Sometimes it is easier to determine what's going to happen in 2 or 3 years than what's going to happen in 6 months. Why is that?
Because we have more time for things to smooth out. There's more volatility in the short term,
Okay.
and there's more consistency in the long term.
Right. Sure. Yeah, exactly. So, like interest rates, right?
Mm-hmm.
No one knows what interest rates are going to be in 6 months, but in a couple years is probably likely we'll be back to the normal, like maybe where we were in 2017 or 18 with, interest rates were 4 maybe, right?
Right.
Reasonable like number. Okay, so let's talk about this. Okay, the first is, it said in the article, house hunting goes digital, okay? Now, this was really fascinating because, of course, you guys know we have a tech platform for real estate agents that we're the co-founders of the startup. And it allows agents to transact their referrals, client referrals with other agents all over the country, right?
Right.
But what was interesting in the article is literally every single metric for everything to do with homes is becoming more and more online, whether it's home searches,
Right.
home everything doing with a home.
Right. So home searches have been online for quite some time at this point, and everybody's very used to that. But what COVID did is accelerated everything else having to do with the home purchase being online. So everything from the virtual tours to the Matterport to virtual staging, all of that is now online, and buyers are using that as a way to sort and consider properties. And then, of course, other services have gone online as well. So home inspections, so you see a lot of home inspections they have video now, so people never actually have to visit the home. The home inspector will put not just pictures up, but video up. You've got mortgage applications online, which of course that has been around for a long time at this point. So there's just so much more online, and a lot of that is because of COVID, because we all got used to doing everything via Zoom and online and that sort of thing.
Okay. One of the big ones I thought was virtual staging.
Mm-hmm.
There's this trend of the number of people that have bought a house sight unseen. And we experienced this a long time ago, back during the REO days. Because, it was $80,000 house. People were just like, I'll just buy it and then, I'll get there and see what it looks like. But, with the level of technology, people have a good idea of what a place looks like. Mm-hmm. And then they just Wanda said, they have the home inspector go over and check it out, shoot a video, agent shoots a video maybe. We just rented a house, literally sight unseen, right?
Right. Literally. So what happened was I put the pictures up from when the house was vacant, but the house was still occupied. And I put the pictures up. I got applications. I processed the applications. The people were very happy with what they saw online. I was happy with what I saw on paper. And we had our meeting of the minds. And they actually wanted to sign the lease before they ever actually walked in the house. And I said I would not do that. Literally, we had the tenant handed me the keys. And half an hour later, I met the new tenant. And he saw the house and said, yep, where do I sign? And, signed, delivered all the funds, everything in just a matter of, same day, just a couple hours later.
Yes. Okay. Second trend, people moving from cities to suburbs. This has been accelerated since COVID. Now, some people have moved back.
Right.
Okay. Because there's jobs in the cities.
Well, there are jobs in the cities, and particularly people who have lived in the cities their whole lives. There's a certain expectation as far as their lifestyle, and the suburbs are for city dwellers. Suburbs are a nice place to visit, but wouldn't want to live there, right? They're accustomed to the restaurants, the entertainment, the whole vibe of the city. So people who are accustomed to big cities. They've either come back or they're coming back.
And a lot of these cities were the big downtown areas.
Sure.
So New York City had a big exodus, San Francisco had an exodus, Seattle had an exodus, and they went out to suburbs or other states and places.
They did. And then, now, there are other exoduses kind of happening unrelated to any of this when they have to do with taxation, but that's another video.
Okay. The other last thing that goes with this is the places where there traditionally were all the tech jobs, and we'll use San Francisco as the area. A lot of those companies are gone. Mm-hmm. They've literally have left, and they're in Miami and Texas and Vegas and other places. San Diego is another place where tech is starting to grow there. That's why San Diego's having ridiculously, the prices are going up again, and there's super low inventory.
Right. No, Nashville, Miami, there are lots of places where tech is taking root.
Okay. The third trend, Sunbelt popularity continues to rise. If you're not sure what the Sunbelt is, we're going to throw this little chart up here. That red area that you see is considered the Sunbelt. It's basically everything above it is Arctic freezing temperatures, desolate wastelands, nobody would want to live there. And then everything in the red is panacea of beautiful, warm temperatures and jobs and everything.
And people who do not own snowblowers.
They don't own any snowblowers. You cannot buy a snow shovel if you go in Lowe's or Home Depot. But what's interesting about this, 75% of all of the population growth in the U.S. has happened in this area, which is, you look at it, is like a third of the U.S. Mm-hmm. But it's where all the population is. And it's because people are going here when they first come to the U.S., or they're going from that gray area down into the red area.
And we do understand that there is population in the Northeast and the Northwest. We're not completely ignoring you, but we also understand that you like to visit the Sun Belt, and a lot of you have aspirations to relocate to the Sun Belt.
Yeah. So, and like people always say, I'm going to retire in Florida or whatever. Okay. The next one, single-family housing demand creates shortages. Wanda, we already know we are 6.5 million single-family homes short. Mm-hmm. The current building trend is not even as fast as existing household formations. Mm-hmm. So what does that mean for the future?
A lot of support for real estate values.
Okay, single-family homes specifically, because real estate means a lot of things.
That's true.
But we're talking about single-family homes.
Right. So right now, you're right. We are discussing single-family homes. So yes, because like you said, we have household formations that are happening faster than new construction, and these people need their own homes. And so it's going to be interesting to see how that plays out over the next few years. We know that people have been making do. We know that people are doing multi-generational living arrangements, right, in order to compensate for this. But we also know that we've got millennials who are trying to, go out there and purchase homes and start their families. So we'll see how this plays out.
The pandemic-related demand for houses is compounded by another coinciding trend: millennials entering the homeownership phase of their lives. I'm going to add to this Gen Z. Mm-hmm. Okay. I know a number of Gen Z people who have reached out to me recently with questions about buying their first house. Mm-hmm. I saw another statistic that right now, the number of people under the age of 29 still living with a parent is the highest since the Great Depression. Mm-hmm. Now, these people are pent-up demand for future housing. Why is that? Because they're at that point in their lives where they want to, start their lives independently, maybe start families. And the thing to keep in mind is that these people are not living with their parents just for economic reasons. They're living with their parents because they've chosen to save money, maybe because they have not found a partner. Okay. And so they're thinking, you know what, I can stay home and stay rent-free with mom and dad and save money. And also kind of social norms have changed, right? It used to be that you couldn't bring somebody to, maybe entertain overnight.
at mom and dad's house, but social norms have changed, and they no longer have to go get their own place in order to entertain overnight. Mom and dad are a lot more liberal about that sort of thing.
I was actually told by my parents that when I turned 18, I was not welcome in the house anymore. I had to leave. So fortunately, I left and I joined the military at 17. Okay, here's another one. As a result, single-family housing inventory is the lowest in approximately 40 years. Lowest inventory in approximately 40 years. And this is looking across the whole year.
Right, so it's a single family, not all housing.
Yeah. As September 2020, there were 830,000 homes on the market in the U.S., down 39% from September 2019, which is normal market. The average time on a home was listed on the market was 54 days, down 18% from September 2019. And we know right now that the average time on the market's about this 54 days again. This is historically low. Please do not quote the 36 days or whatever it was in 2022. In June 12th of 2022, at the peak of frenzy. That is not the benchmark for how the housing market is performing. Inventory is extremely low. Homes on the market are not going to be on the market very long. And this is not going to magically go to 5-6 months or whatever, right?
Right. And homes that do remain on the market, they're one of two reasons. Either the product or the price, right? So homes that don't appeal to a whole lot of people, they're going to stay on the market longer. Homes that are priced optimistically, those are going to stay on the market until either the market catches up with the optimistic price or the seller catches up with the market.
Okay. Here's another one. Home prices continue to rise. This is going to be a trend. Will they? Yes, June 2022 to June 2023, the prices will not be what they were, but they're still more than they were 2 years ago. So why don't we use 2021 or 2019 as the benchmark? Home prices are up 30-something% from 2019. Can we use that as a benchmark? But I can tell you this, I can almost guarantee you that in 2028, 5 years from now, home prices will be up, probably in every single market, probably up quite a bit. The estimate was they would be up, like 4 or 5% a year, starting in 2024. Think about it from a simple supply and demand. New home builders are not building enough homes. They're just not. Household formations are going to start increasing as these people who are living with parents get jobs, get married, and move out and create a household and then go demand single-family homes. There's going to be a massive demand for single-family homes in the next 5 years that the home builders will not be able to build enough homes for. And apartment building isn't going to cut it because people don't desire to live in an apartment, right?
Right. I mean, home ownership is still the American dream, so people do want single-family homes.
People want to lock in a known fixed payment.
Right. It's very important to your household budget to know what your housing costs will be going forward. And the only way that you can do that is if you have a mortgage or you don't have a mortgage and don't have a rent payment, right? If you have a rent payment, then you have no control over your housing costs, and you know that your housing cost will go up over time versus a fixed rate mortgage.
Due to the increased demand for single-family homes and dwindling supply, prices for single-family homes shot up in 2020, right? Are expected to remain high in 2023 and beyond. It effectively no housing crash, no massive, because you need an imbalance in supply and demand. In 2006, in Las Vegas, by the end of the year, we had 26,000 houses in the MLS. Vegas was 40% smaller back then. We would have to have 40,000 houses on the market. We basically got up to about a quarter of that, which was a normal market. And now we're going back down. I think it was 39 straight weeks of inventory declining. Less people putting their home on the market every week after week, right?
Right.
Those were the numbers.
The other thing to keep in mind that inflation is a real thing, and we're certainly hearing a lot about that right now. But inflation impacts housing as well, right? So it impacts housing in the form of rent increases, and it impacts housing in the form of increased property values. But where inflation does not impact housing is in terms of your fixed rate mortgage payment. So once you've locked in your mortgage payment and you're off to the races for the next 30 years, the amount that you spend on your housing remains the same. So as inflation progresses, your payment actually becomes more affordable.
The other thing that's pretty incredible that the local the regional banks kind of got hit with was that, remember, everyone refied their 4% rate to a 2.5% rate. These people that bought these higher interest rate loans will all refi. They will not be paying these payments for the rest of their lives. Mm-hmm. Matter of fact, I think it was December, January had the largest refi boom in the last 12 months, because all the people who bought with the high 6 and low 7% rates were, getting. Matter of fact, I talked to somebody who got a 5% refi mm-hmm. on I think it was a VA, but they did a refi on their loan and they got a 5%, and they were like, "Yeah, I'm very happy. I just got a 5% loan." And I did a refi. So people have refied. A lot of those 7.3% loans people got, a lot of them don't have them anymore. Right. Interest rates are over 1%. Mortgage rates are over 1%, which leads us to the next point, number 6. Mortgage rates drop. Mortgage rates are likely to drop. Maybe not in 3 months or 5 months, but certainly 2 or 3 years from now, mortgage rates are highly, highly likely to not be as high as they are now.
Right.
And if they are, then that means we haven't had inflation for many years, and home prices are going to keep going up, right?
Right. And then a lot of these people who have the higher interest rates, a lot of the lenders put in clauses in the loan saying that they would refinance them either for free or nearly for free. So they're not in a bad position. They're not going to have a high cost refinance, and it's just going to make their payment more affordable. And that's going to be not only is it more affordable against what they were paying before, but remember, they're getting increases in their income due to cost of living increases that we're all seeing, and because of inflation. So that mortgage all of a sudden becomes even more affordable. So not only will their mortgage payment drop because of the lower interest rate, but it becomes even more affordable because their income increases.
The last one, rental property market declines. Now, this is not talking about single-family rentals. What is this talking about?
It's talking about apartments. And, that there has been a boom in apartment building, and not all apartments are being filled. It depends on the market. So here in Vegas, apartments are being filled, very quickly, and they cost a lot. The median price, I think, for an apartment now is like $1,500 a month.
That's the median in Vegas, but the new ones are all way over that, like
right.
2,000 plus. The newer apartments, it's minimum $2,000 to get in there.
Right. So it is very expensive. And again, remember, these are not fixed costs. These are costs that are forever increases for increasing for the tenants.
The migration out of big cities has resulted in the highest apartment vacancy rate since 2010 and declining rental prices. This is mostly big cities that are having this. Seattle, San Francisco, New York to some extent. New York still has a pretty high vacancy rate.
Excuse me.
Even though people have gone back. Another quote, while rental vacancies are increasing in major metropolitan areas, demand for rental properties is actually going up in mid-sized and smaller cities around the country as demand for homes in these areas outpaced the supply. So the people that left the city, the people that left downtown San Francisco and went to San Diego or went to Vegas or even the East Bay, probably went and bought a house or went to rent a house or something. But they left a city where they were renting an apartment, and they probably didn't go to another apartment. They probably went to some place where they said, I can get a house for this rate. Mm-hmm. And then even the fact that the homes were maybe the same rent or less, they were less price sensitive because they just paid $4,000 a month for a studio apartment in downtown San Francisco. Now they're out in the suburbs going, oh, this is super cheap. I'll just buy this $3,000 dollar a month payment on a single family home. It's a house, right? Okay. Those trends. Now we talked about this. when we do our videos, we try to get like up-to-date data. We talk about a lot of month over month. We do some year-over-year stuff. What's important is this 3 to 5 year, because nobody out there is buying a house. Like, this is not trading Tesla stock. You're not going to buy like the Todd. But if you bought a house last year, you're already down 6.3% in Las Vegas, in Summerlin. Oh, that's great. Okay. That's fine. But in 5 years, we're going to be way up on those. I don't believe the home prices are going to drop. If I thought home prices were going to drop, then we would have sold a bunch of rentals. Here's the other thing too. The housing crash bros, if they're so smart and they know what's going to happen in housing, where were there videos in 2019 and 2020 that were talking about the 40% increase? How come it's always down? It's going to go down. This month, from last month, home prices went up in Vegas. They went up nationally too. Remember, it was like 0.18% or something. They just came up with it was the March numbers came out.
Right.
They went up from January 0.18%, which is not a lot, but it's not down. And that didn't happen at all from 2006 to 2009 or 10. They went down every month. They went down.
Right. Look, the Crash Bros, they're getting lots of clicks, and that's good for them. And
they're not selling any real estate.
No, and that's okay. They're doing great, and we applaud their revenue. How's
you know who's
that?
selling real estate?
We are.
We're selling real estate.
Yes. Anyway, what did you think? Did you get something out of this? Did you like it? Would you like to make a comment? Please like the video, subscribe, hit the notification bell, and please leave us a comment. Tell us what you think. Tell us what's happening in your market. Do you like Todd talking about the Crash Bros?
They love it.
Are you tired of it?
No, they're not tired of it. They love it.
Tired of it?
The taunting.
And we'll see you on the next video. Bye.
Bye.